Hello everybody. Today we're going to go over a few things. We're going to go over how I'm personally investing during this crisis. It's an interesting time for everybody and we all need to take advantage of it if we can. And I think I am, but we'll see once we get out of this. Make sure to always research your own advice, research your own opinions, talk to others before you make financial moves. Every investment is always a risk, even cash. So make sure that you do your research before you just start buying things. Anyways, let's look at how I'm investing during the crisis. So let's look at Warren Buffett. He always says be greedy when others are fearful, and be fearful when others are greedy. How he made his billions. But you know what else he did? He still used his noggin. He didn't just see things go on sale and just buy them all. He looked at the industries, what's surrounding the events, how they got as low as they are, if they're being oversold, undersold, overbought, and then he made his opinions that way. He didn't just see something down 50% from its high and put all of his eggs in that basket. It's not using your noggin. So today we're going to use Disney as a study. The Disney stock has dropped quite a bit since its peak because of everything going on. But will they be able to survive the storm? You know, they have theme parks that are closed, cruise ships that are closed. People can't go see their new movies at movie theaters. Almost all of their industry has taken a huge nosedive. But Disney Plus might pull them through. They're still probably building or making more movies. And on top of this, anybody who ever been to Disney World or Disneyland or any of their cruise ships or theme parks across the world, you know Disney is #1 at innovation. So there's no way, with innovation and imagination the way they are, in my opinion, they can't figure out a business model to make it through what we're going through in these times right now. But they have to have the numbers to be able to get through it. So we'll take a look at it. So I always like to start with where everything was before the storm began, their prior finances. Does the company make an income before everything happened? Or were they already operating at a net loss? Did they have cash on hand before everything occurred? Or did they just take it all out in loans? Did they have growth year over year of their income and their profit? And the stock price as well. Did the stock price have a consistency of going up year over year? Had they been in a slow 5-year decline? What's happened? Are they still the same? Well, let's take a look at Disney and we'll be able to see all of these. All right, here we are real quick on Yahoo Finance taking a look at the income statement at Disney. They just came out with their new earnings today, by the way. I haven't had a chance to look at them, so these are a little old, but they'll still do for this circumstance. So the first thing on prior finances was, does it make an income? Well, let's look. Their net income was a little over $11 billion. Because reminder, all of these are in thousands. So their net income is somewhere over $11 billion. That's a very good income. But that also has to go against all of their expenses. And we can see that their expenses are pretty big too. We got $42 billion there. Their operating expenses, $15 billion. That's a lot. But remember, because they have these theme parks and cruise ships, and they're able to, unfortunately, but also fortunately for the business, furlough a lot of these expenses and these businesses, or these employees, and get rid of a lot of their expenses, those will go down drastically. Secondarily, cash on hand. Well, let's look at their balance sheet, see what they have. Total cash, it's not that large, surprisingly. Total cash is only $5.5 billion, but they have receivables coming in, they have inventory on hand, and other assets, which leaves their total cash value on hand a little over $28 billion. That's a good amount to be able to weather the storm. And then also we have growth year over year. So we'll go back to the income statement here, and we'll look. I have it selected to annual, not quarterly. So, total revenue. Let's take a look. You can see it has gone up pretty much year over year. 2016 to 2017 was fairly flat, but going into 2018, we have an extra $5 billion, and going into 2019, we have an extra $10 billion. That's phenomenal. That is great year over year growth. A solid 10 out of 10 to me. And then secondarily, we wanted to look at their stock price and how it's done before the storm again. So let's look here. I have it at a 6-month. We can see their stock price was around 150, 140 to 150. And now we're at 101. But it has had some very low lows that only were there for a brief moment in time. If we look back at let's begin at 1 year. We can see we were at 135, and then we were up in the 140s. That is some growth. It's not exceptional, but it's still growth. If we look further out at the 5-year, we can see very large growth. Down here, we were in the 90s, and then the hundreds. And then, for quite a while, we've been up above that in the 130s and 140s. If you average out, draw a growth line there, that's substantial, and that's strong. So we went over the prior finances, and I find Disney to have very strong prior finances before everything occurred. They were making an income, they had good cash on hand, they were growing year over year, and the stock price showed a strong, consistent, but slow growth. I can't complain. Well, their current situations. I like to think, do they have the cash to withstand? Are they still making a profit? What are they doing to innovate? And is the stock price, in my opinion, oversold? This last question is largely an opinionated question, and it ties into our next slide, which we'll get to here in a little bit. So we're back here at Yahoo Finance on their financial statements for Disney. The first question was, do they have the cash to withstand? Well, let's look a little bit here. Well, their cost of revenue is somewhere around 42, plus their operating expenses. That leads to about a $57 billion a year expense, again, before the storm, when theme parks shut down, when cruise ships shut down, and things of this nature. They are able to lower those costs substantially. So let's still see, based upon their balance sheet, if we think they're able to withstand. They only have $5 billion in cash directly, and only $28 billion in income, or in total assets. The receivables they will receive, but when? We don't know right now if they're getting them very quickly because of everything going on. Lots of companies are attempting to slow their receivable or their bills. That way they're able to extend the cash they have on hand. However, we do know Disney definitely has large lines of credit. I don't have any of that information in front of me, but we can assume that they have quite the lines of credit. They are able to extend their debt payments they have now, and they're able to possibly, if need be, sell some of their assets or use them for other things in the meanwhile. So I think that Disney will have the cash to withstand. The second question, are they still making an income? This is also very, very important. If a company might not have total cash to withstand the storm, but they're still making some level of income or profit, just not as large, that's great. It means that they are not only able to, they are withstanding it. So, Disney, again, came out with their income statement today. I don't have it loaded yet, but let's look at what all Disney does. They have movies you can still buy. They have toys for kids that are still selling. They have all sorts of themed items. And most importantly, in my opinion, they have Disney Plus. Disney Plus is doing phenomenal right now. I read earlier, I believe it was 54 million people have signed up for Disney Plus. That's an insane income that doesn't cost them much to sustain. And that's fantastic in these times. The next question is, what are they doing to innovate? Well, We don't know exactly what they're doing to innovate right now. I haven't read anything on it. But to anybody who's ever been to Disney World, Disneyland, you know they're the king of innovation and imagination. So, when it comes to new ideas, new rules, new regulations, new safety procedures, with the imagination and the innovation that Disney has shown over the years through their theme parks, movies, animations, everything they do, I think they'll be able to well meet the guidelines in very, very safe and entertaining ways. And the final question, are they oversold? Well, we're going to go back here to the Disney Picker here on Google, and we can kind of look and see if we think they are currently oversold, or if we're thinking they are kind of where they should be. Well, we had a high point here of 140, and then we saw they went down all the way to $85 a share. And now we're back up to about $100 a share. We've seen there's new highs right here and right here and right here. Each high is about 105, 106, and then the most recent is 112. And then we see the lows associated with that. This one here is 93. That's quite a low. If you back up a little bit, we're about 95. This low here, 106, and this one right around 100. This means to me that until things change, Disney is going to be somewhere between probably $94 a share and $110 a share. That's purely based off of Disney Plus, the cash they have on hand to withstand, and other incomes that they're capable of bringing in. So do I think they're oversold at $101? Again, this is me personally talking. I'm not a financial advisor, and you should seek investment advice from your own and do your own research. Don't take my word. I think it is on the verge of being oversold. Back here, when it was $85 a share or $88 a share, I think everybody knew that it was oversold. I think everybody was scared though, but if you bought in at 85, you're probably lining up to have a great day. Over here at 101, considering that we were up before it all happened 140 till today, down 28%, that's still a very good return. And Disney, in my opinion, I think it might be a little oversold, but not wild. So we saw Disney likely does have the cash to withstand. They have credit, they have some cash, and our second question here, they're still making an income, possibly even a profit. Again, you could look at their earnings report that came in this afternoon. I didn't have an opportunity to, but they likely are. And Disney is the king of imagination and innovation. And lastly, are they oversold? Next, I like to look at if they will be successful in the new world. In my opinion, what we're going through is going to change the world for quite a while. So we need to figure out if they're going to be able to be successful when things go back to the new normal. So, will they be desired in the future? Do people want to go on cruises or theme parks? Are people going to want to go to the movie theaters? Are they able to innovate into success? So if people are nervous of going on cruise ships, if people are nervous of going into large crowds, if people don't necessarily want to stop social distancing, will Disney be able to pull through? And lastly, how fast will the comeback be? When things open back up, are the lines into Disney going to be a mile long? Or is it going to be a slow trickle of people coming in? These are all thoughts. These are things that you have to go through in your own mind. In my opinion, people will desire to go to Disney. There's never been a time that I know of that you can walk into Disney and not have a line going into a ride. Again, innovation. I keep talking about this, but Disney, their whole thing is imagination and innovation. They're going to do great. And how fast will their comeback be? We're not sure. I want to say it's May 11th. Their first theme park over in China is set to reopen. So if that continues on to here, we can expect here in a few months the Disney theme parks to reopen as well. Movie theaters will open back up. Movies will start to be produced again. And people will want to go on cruises and vacations at some point once more. But how long that will take, I don't know how to tell. So, with this company as reputable as Disney, and so pronounced in our daily lives when it comes to Star Wars, when it comes to Disney magic moments, look at all their new and upcoming things. They still have stuff in the works. Disney Plus is still going. Disney is making leaps and strides before everything happened. So do you think they'll still be doing the same? Leave your comments below, and thanks for watching.